Hello to all traders and welcome back to another Market Insights video brought to you once again by Orbex. So on this Monday morning session, we're looking at the US indices after they had a bit of a slide in the early session. And not only that, stocks fell quite dramatically on Friday after the global economy was given a little bit of a dismal warning that it was going to actually have another leg to the downside. But all three indices did fall under just 1%, but it did cap off their worst week since June. So multi-month lows on that procession, and we're seeing that the CPI data last week was a big influence, and also other indices have been dropping around the world as well. So investors are focused on the first two-day meeting, which is starting tomorrow, and they are in for another interest rate hike by 0.75 of a point. So if you remember correctly, this will be a hat trick of 0.75 point increases. 3 times this will be done in a row, with the Fed aggressively still hiking rates, even though inflation doesn't seem to be really pushing that much lower. It has come down slightly, but there is a warning that it will remain quite elevated for quite a long time. So we'll see if that's going to have any repercussions on the state of affairs for the indices. So looking at the Dow first of all today, because I just wanted to show you this depreciation. Like I said, one of the worst weeks since June, and you can see why, because now, most importantly, we're heading back down to the 30,000 level, roughly about here, which we didn't see since, like I said, June. And this is going to be quite a big deterioration. We saw what happened before. So we are seeing now, possibly, will we get, just remove these drawings, it's a bit easy to see, will we get another upside channel quite quickly? We'll have to wait and see, because at the moment we are seeing a V-shaped decline. Nothing too much in the way of divergences on the RSI neither. So we are in a fully fledged bear market at the moment, especially with this very, very bearish candlestick we saw at the middle of last week. If we go on to the 4-hour chart as well, we are now seeing what's quite important is very, very bearish movement. And I've been speaking to a lot of investors and traders over the weekend. We're waiting for the markets to open today to see what the next move is. But obviously, we are all eyes on this Federal Reserve meeting, two-day meeting starting tomorrow. So this will probably where the pace starts picking up. At the moment, we're looking for a slight consolidation. It most probably will start moving just above the 30,000 mark. I'll point that out for you once again. So just roughly about here, we're not expecting a big dive anytime today, especially, but in tomorrow and Wednesday's events, it could be another move to the downside. So just keep that in mind for the US indices in general. Obviously, the Dow, NASDAQ, and the S&P usually move in tandem at this particular time when there's big fundamental news impacts coming out, especially of the Federal Reserve. So they're really, really kind of controlling the market at the moment, especially in the American zone. If we're looking at the S&P as well, just wanted to highlight that again, they had one of the worst weeks since we had this decline in June as well. So as you can see here, moving pretty much in tandem with the Dow, another climb to the upside, but now as you can see, we are now in a fully fledged bear market, moving to the downside, and we're just waiting to see if these particular lows are going to be hit anytime soon. It is just hovering roughly around the 3,900 area. So this is quite a psychological break for a lot of traders, because at the 3,900, this is when prices started to pick up quite significantly in the last few trading sessions. But unfortunately, it just wasn't enough. It did hit a peak here, heavy resistance, and now a move to the downside. So the S&P is really, really fundamentally controlled at the moment. So we'll see what the next news is in store. But like I said, all eyes on the Federal Reserve in the next coming trading days. And if we're looking on technicals at the moment, we're just seeing what the next level is. As I said, we are looking at the 3,900 area, which is actually just breaking at the moment. So this will, the next move will be very, very significant, because we'll see if it's going to actually consolidate for a while like the Dow, or if we're going to have a very heavy signal to the downside. On the divergences, there is a slight bullish one, but will it be enough to pick up prices significantly? And as I said, Tuesday and Wednesday will be the big days for the big moves in the American market especially. So join me again tomorrow, where I'll be looking to see how gold is performing, oil, all these commodities in tandem, and also the US index, to see where we're going in the next few months as well. Obviously, 2022 will be over before we know it, but the last few months of this year are supposed to be very, very detrimental for the American economy, because the Fed is still planning to hike these rates as well. So let's see what's in store for tomorrow. So join me then, and have a great trading day ahead. Bye for now.